Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, January 18th, 4:58 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. You can see over here on the trend gauge, market leaders showing a green arrow. Short term, still a green arrow despite the mid caps and small caps being under their 21-day moving average. Tried to get a little bit of a rally going today, failed, but a strong close, still underneath that key level though. And then all five of the major indexes are above their medium-term 50-day moving average and long-term 200-day moving average. So the green up arrow there as well. So what happened today? Overnight, Taiwan Semiconductor, a big chip equipment company, announced their earnings, and they were very strong. They were up 9.8% on the day, and this carried all the other chip equipment companies to 4 to 5% gains, and also AMD and NVIDIA to big gaps higher. And couple that with an Apple upgrade. Everybody's been downgrading Apple lately, but an analyst came out with a compelling case, and Apple had an extremely strong day. That led the NASDAQ-100 most of the day, pulled back a little bit, very strong afternoon close. NASDAQ-100 closed with an all-time high. S&P 500 just a few points away from an all-time closing high, still hovering around that 4,800 level. My expectation is that going to need some strong earnings reports to blast through that level, but those are right on deck over the next couple of weeks. So here are the numbers. Big seven up on average 1.33%, led by Apple. Tesla dragged down again, down 1.7%. They keep cutting prices. You cut prices, it cuts your margins and lowers your prospective earnings, and that's what's hitting the stock, plain and simple, no matter what you believe in the story. There are numbers that have to back up that story. The RG-8, this is our in-house 8 growth ETF composite, up 0.74%. We're going to look at the charts of all of the big seven, plus the three that make up the FANG Plus index and the RG-8 in today's show. S&P 500 opened up 0.35%, faded to negative. Strong close, put it up almost 0.9%. Equal weight up 0.5%. NASDAQ-100, the big winner on the day, up 1.42%. Equal weight up 1.15%. Dow up 0.5%. Mid caps up 0.8. Russell 2000 up 0.55 after spending most of the day struggling underwater. Global 60/40 up 0.46%. In-house GROTECTION getting back most of yesterday's losses, up 1.16%. Let's get to the charts, the tail of the tape, and we'll wrap things up then. Here's the S&P 500. You can see the undercut and reclaim of the green line, the 21-day moving average. That's our short-term indicator, and a nice follow through to the upside today. So good stuff there, reclaiming the 8-day exponential moving average in the process. Here's the champ, the NASDAQ-100 all-time closing high, 412.99, bounced off the 21-day yesterday. Led by Apple. If Apple's up 3.3%, it's going to be tough for the big cap indexes to not outperform. Here's the Dow Jones Industrial Average. Its leading component, UNH, had a rough day today, but it undercut and reclaimed yesterday's lows and the 21-day moving average and closed right on the 8, up 0.54% on the day. Now the 2-week indexes, MDY, rallied up right below its declining 21-day moving average, almost flat, the 21-day moving average. So, and below the 8, we want to see some follow-through strength to there. There's that morning star pattern that I talked about yesterday that was successful. It's after you're down, you stretch down too far, start to slingshot back, and then reclaim at least half of the prior day's candle. So that was a successful setup there. Not quite successful on small caps, didn't get to within half of the range 2 days ago, but didn't make a new low, so still held the 10-week moving average and the 50-day moving average, and closed near the top of the range, but relative strength has been terrible on this. Go to the VIX. Still above the 50-day and the 21-day, which we prefer that it isn't, but also below that 15 level, which is a positive sign. Let's go to the dollar. Dollar inside day today closed about mid-range, slightly down. Uh, how did that impact precious metals and precious metal stocks? Gold rallied up 0.82%. GDX, I don't even have these on my primary screen anymore because they've been acting so badly. GDX up 0.3%. Not a good day there, but even worse, significantly worse, was Bitcoin. Breaking through this 20 level, that's the lows of the recent range, now trying to fill this gap that goes all the way back to the beginning of December. Since that spot ETF came out, here is the sell the news day. Right there, 5 straight days down since then. Big move off the highs, ugly stuff here, and the whole Bitcoin complex looking terrible as well, with Coinbase down over 7% today. Let's flip to bonds. Bond prices higher today, meaning bond prices lower, meaning yields higher. Not a big move on the mid duration. It was mostly on the long duration where the changes were felt. You can see down 0.9% here on TLT, meaning the 30-year yield making highs, breaking above the downtrending 50-day moving average, up 1.4% on the day. Let's see. That is our inter-asset correlation. Let's go to the tail of the tape. Some news. Jobless claims before the open below expectations. Philly Fed manufacturing below expectations. So some conflicting data there. This saying good for wages and people looking for jobs. That's not what the Fed wants to hear. There's a lot of mixed signals coming out of the various Fed talking heads. We'll see how it ultimately resolves in about 2 weeks here. And Philly Fed manufacturing very weak. But bullish sentiment dropped significantly up here on the line AAII and NAAIM. We track these because at extremes, these are significant. NAAIM got above 100. That marked the top in the market a couple of weeks ago. AAII made a high as well. And the difference between the bulls and bears, I read an article about a magic number 32 here. If you get the bulls minus the bears and it's 32, that is something to be aware of. That just means that we're too far to the bullish side, and sentiment is always a contrarian indicator. But this is good news. Bullish sentiment dropping is good news for the overall market as it tends to mark. The extremes mark tops and bottoms. Okay, day count from down 2 to up 1, back above the ADMA, 9 days above the 21-day moving average. Some sectors, ITB, builders, nice day today. Stocks, by far the big winner today. XLI, C&K, that's industrials, communications, and tech, and transport strong today. High low volatility, high dividend stocks weak today, and biotech. This was more, the high beta had been lagging lately, but it was the low volatility and dividend stocks that lagged today. XLEP, UVRE, that's energy, staples, utilities, healthcare, and real estate, and of course, Bitcoin. So in-house, we added to the Datadog position that we started yesterday, trimmed some more of the small cap ETF, and bought ELF. ELF down at one point almost 7% today, as it's moving from the S&P 600 small cap to the S&P 400 mid cap. That sounds like a promotion, right? Well, it's a promotion, but there's a lot more capital in the small cap index than there is in the mid cap index. So that means whoever owns the small cap index has to sell ELF, and there's more sells than there is buyers in the mid cap index. But we've done a little bit of back testing on this, digging into history, and in leading stocks in a strong market, they tend to recover. So we bought ELF today. We'll look at that chart in a minute. Bottom line on the day, mild uptick in our exposure, 1.51 to 1.54. And the bottom line, led by Semiconductors and Apple, strong close carries the NASDAQ-100 to all-time highs. Let's look at some charts here. First, we'll take a look at ELF. Volume was high, that's to be expected, but like I said, look back at Pure Storage and also Rambus for two names that had a temporary weakness on their addition to the S&P 400, but then went on to make highs shortly after that. So we'll take a pullback in a strong stock to a big support area, in this case that 150-ish area. We got in around 155 after it started to bounce. So that's ELF. Let's take a look at the rest of the portfolio. Crowd looking fantastic, bouncing off the 21 yesterday, making higher highs today. AMD, big gap up, just stretched too far. At the top, it was 4 ATR above the 21. It pulled back, went red slightly, and then up into the close, making new higher highs. NVIDIA also had a gap up, closed at the top of the range, up 1.88%. Let's see, and Uber, recent holding just continues to power to higher highs after an undercut and reclaim of the 8 yesterday. On the weak side, Lilly, but bounced nicely, perfectly actually, off the 21-day moving average and ended up down less than 1% on the day. SMCI, which we got stopped out of yesterday, gapped up, came all the way down again to the 21-day moving average. After hours, they upped their guidance. It's up 6% after hours. Unfortunate that we got stopped on it, but we did, and that's part of the process. Not going to cry over it, just going to move on to the next stock. And a couple of strong ones today. DraftKings follow through to the upside. A nice gap up 7% on 100%, 105% above average volume. ANET also got an upgrade. New closing highs up 3.4%. So a lot of leaders acting pretty well today. A couple of them reversing. Shop got a downgrade, and that did not have a good day. But it did stop going down right on the 21-day moving average. This is another leading stock that made new recent highs before pulling back over the last 3 days. All right, let's go to, we'll start off with the Magnificent Seven charts. Here's Apple, held the 200-day moving average twice over the last 3 weeks. Nice bounce up today, above average volume, back above the 21 into the still rising 50-day moving average. Amazon held the 21. Let me get a little bit more real estate here. Amazon undercut, reclaimed the 21 yesterday, back above the 8 EMA today. Microsoft tested the 8 yesterday, new all-time highs today. Meta tested the 21 yesterday, close to all-time highs today. NVIDIA continues to just charge ahead. Tesla, obviously the weak link in the Big Seven and in the FANG Plus 10. Google bounced at the 21 yesterday, looking fine. Netflix got an upgrade, reclaimed the 21 today. AMD, we already showed. And finally, Snowflake, the number 10 stock, can't get back above the 21 over the last couple of days after bouncing at the 50-day moving average. Now and we're going to bring the stochastics on here. This is the RG-8, and a couple things that we want to watch here. Small caps have been underperforming, and as part of that, small and mid growth have been underperforming, as you can tell from these 8 charts that we're going to look at. But they're getting to where they're extremely oversold. They're coming into support levels such as the 50-day moving average, and some of them have had the stochastic cross to the upside. So we're looking for some positive feedback in these names. SLYG, IWO is the Russell 2000 growth. SLYG is the S&P 600 growth. This looks better. And when the SLYG looks better than IWO, it just means that it's the more speculative companies that are lagging. SLYG, the S&P requires certain fundamentals to be included in their indexes. So there's the small cap growth. Here's mid cap growth, starting to look a little bit better. Note the stochastics never got to oversold and crossing back up now. QQQJ, kind of speculative, but bounced at the 50-day moving average, still oversold. PDP, the best looking one. This is a momentum ETF. kind of thinly traded, but sometimes it leads these names. SPHB lagging over the lagging first week in January, consolidating second week, down in the third week, below the 21-day moving average now, coming into oversold. We want to see some improvement here. FFTY acting well, and this is indicative of fundamentally strong leading stocks. This is the IBD 50. Those have been acting well. The CanSlim community stepping in where they need to. And ARK-K, again, speculative. This one looks the worst. This looks like Tesla. No surprise, because Tesla is one of the biggest holdings in ARK-K. It's oversold. If Tesla stops going down, I would expect this to stop going down as well. But for now, this had a great run along the 8-day exponential moving average. Then it rolled over, broke the 8 rolled over, broke the 21 rolled over, and it's just not been able to reclaim it. And those moving averages are, we pay a lot of attention to them. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. If you're interested in becoming a client, my partner Dan Stewart is at dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. Our flagship portfolio is named GROTECTION for growing assets and uptrends, protecting them in sideways or downtrending markets, and particularly if we ever get below that big black line near the 200-day moving average. That's where all bear markets occur. And we'll be extremely defensive when that happens. Those are our rules. They sound simple. Implementing them is much more complicated than that couple of sentence explanation. But with that, I'm going to wrap it. This is Don Vandenbord for Revere Asset Management, telling it like it is. Thanks for listening and have a great day.